if you've got the funds and you're looking for those additional revenue streams and you want truly passive mailbox money, go find who is doing it really well, that has the experience, that has the background, that has the integrity and the values that align with you, to be able to go after that. So that's what's worked for me.
Welcome to The Path to Wealth, the show about well-being, fulfillment, and financial freedom. And I'm your host, Hennche. Welcome to another episode of The Path to Wealth. I'm your host, Hennche. In today's episode, we have a special guest joining us, Brandon Cobb, the owner and founder of HBG Capital and the CEO of HBG Construction. Beyond his entrepreneurial journey, Brandon is dedicated to helping fellow business owners achieve sound financial choices through his podcast, Recession Resilient Real Estate Radio. How timely, since we're somewhat in an odd recession period. His expertise has earned him recognition in esteemed publications such as Forbes magazine. I'm excited to hear Brandon's valuable insights on generating passive income within the entry-level housing market and his remarkable journey to success. Welcome to the show, Brandon.
Hey, Hannes, it's great to be here. Thanks for having me.
Yeah, of course. I mean, we're investing in the same markets. We think alike. I always like to, poke holes into my own theories. So it's good to have somebody on that's so local to the Nashville market, which for 5 years people have been telling us it's overbuilt. This year again, people are saying it's overbuilt. What's your take on the Nashville area?
Yeah, great question. We're long-term on Nashville, and I guess it looks on like what horizon of investment philosophy do you have? Are you trying to get it out in the next year or two, or are you playing the long-term game? All data indicates that Nashville is going to continue to see long-term growth right now if you're looking at the long-term. A lot of people who've been in the game for decades and through 5, 6 of these market cycles say that, hey, this is going to be the next Atlanta. So we look at what the current data indicates, right? So is it overbuilt? Is it going to continue to grow? Are absorption rates for rents and for new homes going to continue to be there? I like looking at the macro. Men lie, women lie, numbers don't lie. So I'm in love with the numbers. You've got a top 10 fastest growing city that's been around the past 7, 8 years. You've got really strong market fundamentals. Nashville's got no income tax state, so it drives businesses here in droves. You've probably heard the likes of Amazon and Bernstein, Epstein. You've got these huge companies that are moving here and they're bringing jobs here. And so what follows jobs are people, and people bring money. It's a market where we didn't shut everything down during COVID. COVID kind of revealed this environment that we all sort of knew was there, but it made it very evident. And you've got business-friendly states and you've got non-business-friendly states. And everyone's moving to Florida, Texas, and Tennessee, because we didn't shut everything down. So there's literally, if you look at the amount of institutional capital that's coming into these states, and Nashville specifically, it's absolutely insane. There's a fun photo that I look at, and if you Google Nashville skyline, past versus present, or I think it's like 2010 versus 2018, you can see like the skyline, the number of skyscrapers has doubled. It's absolutely insane how much growth that we have. So we've got some really strong fundamentals. The city, what we see on more of a micro level, like they're incentivizing even more businesses to move here. It's a very business-friendly state. It's not like California where they tie everything up for 2 years. It's hard to get permits. It's still developer friendly, though a lot of the local guys who've been doing development a while are kind of spoiled when it comes to Nashville, and we're kind of throwing some temper tantrums because with the growth, it has had some issues. I remember when I could go and pull a permit like same day almost, and now it takes a while and the inspections and stuff. But then I hear guys out in California saying it takes 2 years to get some stuff approved, and I'm like, holy crap, I can't even imagine going through something like that. So For long-term growth, we're still seeing really attractive demographics. It's still a great place to live. It's in a spot that's centered around. It's like unique to the Southeast, so there's a lot of logistic channels that flow through there. So we're still seeing strong absorption rates for houses. So right now, all of the data indicates that we've still got a nice runway in front of us. But as soon as that data starts to turn, I'll be the first one to raise my hand and say, hey, it looks like things are slowing down.
Yeah. And that's also kind of our assessment on Nashville. And it's what I've seen personally. Like I've been coming there for almost 10 years. And then I had a 5-year gap in between. And when I came back, I was like, what happened here? This was like a different city before, the kind of inventory I saw, the new towers. And this year I spent some time there also walking a lot of comps, like even on the higher end, just to see them. There's some really cool inventory come to market. There's some inventory where I was like, what were they thinking? But but also what I've seen is quite some concessions already made this summer, especially on the higher end where they were trying to fill in new inventory. But it's an interesting overall market. And I think coming from Germany originally, living in New York, I definitely know what it means that if things are moving, it's entrepreneurial friendly. I literally probably left Germany without knowing it, but in hindsight, I would never go back because you're tied down like in California. I'll give you an example. A family friend of ours built windmills for electricity generation, and they're powerful enough to power like 4,500 households. And it took them 10 years to get through the permit process, and then ultimately like 18 months to put them up. And that's just wild. That's like mind-boggling to me. Like literally the technology of windmills has evolved in the period where they planned it, that they had to go re-enter the permit process to put in more powerful devices because the permit process overall was so slow. And that just stuff blows my mind. And I think that's where a Nashville case just speaks for itself. And we've seen the same, as you said, in Florida and in Texas. People that want to do stuff, they will go places where they can do things and where they're not tied down by regulation and where there's a tax-friendly environment.
Yeah. And I mean, really what we look at is money going to continue to flow into whatever we're investing in, or is it going to flow out of it? And a big part of that is wherever you're building, you're investing, you've got to look at the macro. All right, is money continuing to pour into that area? And if so, all right, there's a high likely chance that provides a buffer in the event that something happens versus somewhere where money's pouring out of. I mean, we're seeing institutional money flock to Nashville, like big money guys. You got not only Main Street moving here in droves, but you've got the institutional guys who got burned during COVID in these non-business friendly states. And they're saying, hey, look, I'm just going to take my money and I'm going to take it to the business friendly states. And it's crazy I just don't understand the policy behind it that some of these states or cities advocate that does prohibit growth. On some respect, I do see it from a local level. You've got these municipalities that don't want growth. They are happy with the way things are. They got in and they shut the door behind them. And they're like, no more. We don't want any more people. My city now, go away. I do see that. But for the most part, that has not been the mindset of most municipalities in and around the Davidson County area in Nashville. They're pro-growth, but they want to do it responsibly, which is great. I can't wrap my mind around why somebody wouldn't want growth, because it allows more tax revenue. You can invest back into the community, but just make everything better. The infrastructure, the roads, utilities, the parks, the green space. But again, I'm not sitting in that planning commission seat. I'm kind of curious though, on your end, why do you think it takes 10 years to get a windmill approved in Germany?
Well, I think initially there was a lot of environmental concern because in order, for example, to put those two windmills in, they had to do a survey of the forest. And in Germany, if you find one, insect or a bird of the wrong species, you're tied down and you have to prove that this is not some endangered species. Yeah. And, there's there's a good part to it, they're trying to be environmentally conscious and stuff. But at the same time, it doesn't really allow entrepreneurs to do their job. Like that same company wanted to... basically, the problem of clean energy from solar or wind is where do you put it? So you need kind of energy storage. And they wanted to have it's kind of a pond or lake system where basically every time you generate electricity, it gets pumped up into the higher water body. And every time you need electricity, it gets basically rushed down through a pipe system into a generator and generates electricity. So they wanted to build the same thing not too far from where the actual windmill is going to be. And they've already put it around €1 million into the permits. They spent over a decade trying to get this thing going, and they're nowhere close to getting it done for environmental reasons. I don't know, they found some kind of insect up in that area where those two potential pond or lakes are. And it's just mind-blowing to me that nothing gets done here in that sense.
That's funny that they're saying it's an environmental issue when you're literally installing a windmill, which is environmentally clean and free energy.
Well, the thing about those windmills is that you need to take down a lot of forest to build them because like each blade of them is like over 100 yards. So the overall windmill is gigantic. And just to get that thing in the forest, they had to take down thousands of trees.
I see.
So it's like that double-edged sword where you have to clear a really big patch, like probably the size of a football field, just for the construction. And then you also have to basically clear a highway into the forest to get those blades and all of those parts into the forest. So it's like this double-edged sword.
Oh, wow. Yeah. Again, grass is always greener, and all it takes is me complaining here about our due process, and then I go over there and I come back and I hug everybody and go, thank God it's not like that.
That's what I'm always saying when people complain in the US about something. I'm like, you have no idea how shitty it is somewhere else. Like, this is why the world is flocking still, despite all the trouble that we might see internally in the United States. The world wants to move to the United States to have opportunity and prosper.
Mm-hmm. Yeah, I mean, I'm seeing not only a lot of local institutions, but more and more, and I don't know if this is like a new pattern or if I'm just noticing it because I've been in the game for as long as I have, but there is some foreign capital that's moving in as well. I know, especially in Florida. I've heard a lot of people in my community talking about Florida and how, especially in like the Class BC value add world, there's a lot of I've heard some Middle Easterners coming in buying apartments. It's been very interesting to see the shift of where foreign capital is flowing.
Yeah. And I've seen it and we've done it. We've raised capital in Germany that we brought into the States because the yield is so much more attractive. The business case is there. And we as a family, we own properties in the Netherlands as well in Germany and the United States. And what I've seen is there is no business case like the case we have in Tennessee, in Texas. Like, I've come back to Germany with the US perspective and I try to find these investment opportunities in the multifamily space. And it was really interesting. Like, there is no positive cash flow from, maybe the first 6 months of taking over a property here. There is no such thing. So the business case here is very different and the yield is different. So it's a lot more attractive to do this in the United States to such a degree where it's attractive for outside investors that are looking for better yields if they can stomach the conversion rate issues. Not everybody understands that part of the process. The last couple of years, we got really, really lucky thanks to, I guess, Putin. One of the investments we placed in Texas with European money, we basically made, I think, an additional 16% just on the money because of how the conversion rate changed during the holding period. So that was like, but you also can obviously move in the other direction unless you hedge against it, which again is just part of the fee structure. But if you can educate people and if you can find a viable vehicle for them to make sense of it, but I think you need a pretty sophisticated substack of investors to take their capital from, for example, Europe and take it to the United States. There's like nothing that you can offer a ma and pa kind of. They're getting like hesitant when you tell them there is a tax liability in the United States and those kind of things, depending on how you structure it. Yeah,
I have, we've got a couple foreign investors who are in our funds. What we've haven't really been able to crack the code on is the double taxation. I've heard there's some pretty sophisticated funds and feeder funds, and there's a very expensive structure and kind of ways to fight the double taxation there. But you're right. If you're able to invest and your currency, I guess appreciates or depreciates against the currency that you're buying the asset in, I mean, yeah, you could potentially double dip and double win there. If it's going in the right direction, it could also lose. Yeah. But that's really great that you're able to get those extra returns for your investors. I mean, that just shows that you're taking care of them and they'll come back time and time again.
Well, I could not take any credit for that. Like if Putin wouldn't have invaded Ukraine, the shift wouldn't have had so dramatically in that particular time when we had to pay out that distribution. So I can take zero credit for that.
Yeah.
Yeah. But anyway, I think what you're saying all holds true. We're seeing international capital flying to the United States and to areas like Nashville. And I think that's it's an additional business case. I've seen myself contemplating moving from New York City to Nashville. I've seen other people contemplating going there. We definitely know businesses are moving in. So in a similar way like yourself, we follow the money and the employment, the jobs.
Yeah, I mean, we're continuing to see a lot of it. It's not slowing down. I mean, anybody that gets an opportunity to come here, just take a tour and drive around. I mean, it's amazing to see how much construction there is. It's really interesting too. I feel like Nashville was kind of even poised for this big boom. There's a lot of cities in Tennessee, like Chattanooga, still a great city, has a lot of the same fundamentals, but it's very limited by the mountains. So you can't really go out a whole lot, and just not as much trade, not as much going on through there. Doesn't have year-round tourism like Nashville does. The city's doing a little bit things, Chattanooga specifically, it's still kind of predominantly controlled by, I'd say, like an older generation that doesn't want the growth, and they hold all the wealth. But I think over the next 10, 15 years in that city, you're going to see a transition as that, their assets, as that older population dies off and the younger population inherits, now selling and development and new people on the councils, I think. But Nashville doesn't have all that. It's seeing growth because of all the great things that are happening there, the year-round tourism. One of the reasons that I really love it is it's just a fun place to live. It's very young. There's a lot of young people there. Young people there are flocking. They want to work. So it's a very young city that has this. If you look at the 440 loop, the interstate that kind of circles Nashville, 10 years ago, that was not very good real estate. It was more of the high crime areas. Yeah. You didn't want your businesses there. More Class C, some even Class D areas. Some of them even war zones, and that's become the most desired real estate now in the past 10 years. And so you've got this exportation of crime. You got a transfer of wealth as these current residents. Property becomes more valuable. They get bought out by developers or institutional capital, whoever, and they move to somewhere more affordable, which is where we focus on. We like the affordable entry level housing, and there's just been this big boom in the downtown corridor in that 440 loop. It's become the most desirable area, and it's just there's no mountains that are preventing that development from happening. I mean, it's just you've got this urban sprawl, man, and it's just taken off. Absolutely perfect for what's happening right now. And all roads point to good things. You've got taxes that are going up in the areas. You've got current residents that, do want to sell. There's a big transfer of wealth there. So that's a great thing that's happening. And then you've got these new communities that are reinventing themselves. And I mean, it's just bringing like a new vision to things. So it's pretty cool just to drive around even on the interstate and just do that 440 loop and circle Nashville and just look at what's going on.
You know what? One of the things that I appreciate in the United States is this energy. It's somewhat what you just described. It's like things are new, things are coming, things are building. And I was watching that series 1923, and the previous one is like 1880 something, where initially European settlers try to go west. And they were going out and just to see the hardship that they went through and to have that better life. And it's part of that energy that you carry, that you speak about right now, that why people appreciate coming there. And it's you're moving away from that lethargic kind of old school European energy that you might find in Germany or in the UK, some of that which you have on the East Coast in those like more established cities. And you're coming to areas like Nashville, and actually, since you said Chattanooga, the one fun fact about Chattanooga is it has the fastest internet in the country with like 25 gigabits per second. But it also has the worst highway part to go to Atlanta. Like you always get stuck there. So there's something to fix on the infrastructure for sure.
It's got the internet roads figured out, but not the actual highways.
Yeah. Yeah. So where did your initial money mindset come from? Is that something that runs in your family, or is it something that you picked up over the years? Where does that financial education stem from?
My journey started when I was 22 years old. I was working at Ace Hardware in college. I'd graduated, was making, I think, $8.53 an hour. And I just thought life was happening to me. I thought I was a victim. There was nothing I could really do about it. Not the best time to try to find a job. I'd look for a year after graduating, couldn't find anything. My dream was to break into medical device sales. And I read this book, Think and Grow Rich by Napoleon Hill, and that just kind of woke me up, right? And it said, look, you are in charge of your destiny. Your thoughts control your actions control your behavior, your behavior controls your habits, and your habits control your character, who you are, and your character controls your destiny. And, that self-help kick, it was like a little snowball that just became an avalanche. And so I would go from subject to subject and just devour particular subjects. And, after I did end up breaking into medical device sales and I had some disposable income to start investing, one subject that I'd gotten absolutely obsessed with was this concept of money and finance and compound interest and how it works and financial freedom. And oh my gosh, you're telling me that, over a long enough period, I can invest and eventually my investments create the income that I need to live. I'm not reliant on a job at that point. That idea blew my mind. And I can't remember if it's left brain or right brain that's creative. The other side's more organized and likes cubby holes and numbers. That's me. I like cubby holes and numbers. So to actually see the numbers and have like a plan and be like, oh my gosh, if I invest this much money over this much time and it makes this ROI, I can reasonably expect with mild risk that it's going to make, 5-6% a year if I want to put it into something to create cash flow. And holy crap, this is a real thing. And so what became really fun was playing with the numbers. Well, if I can increase my, returns from 5-6% to 7-8%, all of a sudden the amount of money I need to save to get to financial freedom is a whole lot less. The journey's like 15 years less. And so I thought that was really cool. And so I'd started this journey, investing my own money into things. And then I realized that there was a shortcut. You didn't have to play this game. You could invest in assets that appreciate, assets that have a, very lower tolerance for a capital loss. It's less like you're actually going to lose money. And so there's a lot of these concepts that I was looking at going, okay, capital preservation is number one. How do I protect my money? Then number two is how do I get my actual capital back, a return of capital? I don't want it in something that's locked away for forever. And then three is, return on capital. So those are the three things I was kind of looking at. And, I fell in love with real estate. I ended up getting fired from my job in medical sales, which was, to me, a huge shock. I had all these sales awards and I was, I loved what I did. I didn't ever want to leave. I thought I was the coolest kid on earth, wearing scrubs and rubbing elbows with surgeons and hospital staff and helping patients out. I really love what I did, but fell in love with this concept of real estate because I felt hit those 3 points: the capital preservation, the return of capital, and then the return of capital really, really well. It's not very often that you get to see an asset that, does three of those things really well. Like Bitcoin, there was a craze. You could make great return on capital, but not so great at capital preservation. And, that was the big part. A lot of people could lose a lot of their money. So the self-help kick is where everything started, and I sort of became obsessed with, how to see money, how to view money, what it really means to have money. So it's a fun thing to kick around, because if you ask what money means to somebody, it's not always the same definition of what someone else might agree with.
Yeah, I think that's for sure. And I think most people come from a very random set of money beliefs, which are just kind of unintentionally absorbed, very limited to some degree. It's not the kind of abundance that you find in Think and Grow Rich, where your thoughts transpire to wealth rather than your circumstances.
Yeah, no, it's 100%. A lot of people don't see it as that. It's very simple to understand, very hard to execute. Building wealth is easy. Implementing it is hard.
Yeah. Some things are simple, but the execution isn't necessarily easy, in that sense. And one of the things that I keep kind of seeing over the years in the United States is that I think the abundance that you can participate in, whether it's the knowledge that you can take, for example, from books that have been out for decades. Even YouTube is like a financial university at this stage. Podcasts can, for example, the All In podcast it's an amazing podcast that I keep listening to, and you get the direct line from people like Ray Dalio and stuff, and the amount of information that we have access to is just mind-boggling. So I think now the real differentiator is not so much access to information, because the information is there. It's in the doing.
Yeah, the doing is a big part of it. One complication is there is almost too much information out there. I think what a lot of people really struggle with, especially when it comes to investing, is there's so many ways to do it. I mean, you go on some blog and you meet some millennial that's retired, about 30 years old. Well, how did you do it? Well, I just, I cut down all of my expenses and lived with my mom and dad for the first 4 years and got married in a duplex, and I rented out the other side, and a house hacked, and I shopped at, Walmart every day. And, for 8 years, I just invested half my income into the VTSAX Vanguard Index Fund. And, that worked. And you're like, okay, well, you started that in 2008. Okay, you kind of got lucky. You got a good string there, all right. But hey, it worked for that person, right? That's a strategy that works. And you got the other person over here. You got the Grant Cardones who are like, yo, man, you got to increase your income. Look, go buy you a nice car. You know why? Because that's going to force you to go out there and make money. You're going to be required to make that car payment. And I feel like everyone's got so many different people, thought leaders, influencers, telling them what they need to do and what the right way is. I don't think that there is one right way that works. I think it's really picking what works for you. I was on a call with, one of my friends. He owns a software company, and I was having a conversation with him. I was doing these interviews with a lot of our investors, and he was like, dude, I only invest in software companies now. He's like, that's all I do is software, because that's what I know and that's what I understand. And I was looking at myself, and I'm like, most of my holdings are in real estate. Most financial advisors would probably be like, dude, you need to diversify. You're over leveraged. Yeah. But that's where my knowledge was. I was watching a Dave Ramsey show, and I think he had Stephen Graham on there, and Stephen Graham's like, dude, analyze my portfolio. What do you think? Like, am I overweight in this area? And what do I need to invest in? And he asked him a fun question that I thought really put things in perspective. And he said, well, if you were to put your brain on the table here, what % of your brain knows real estate? And he said, maybe like 85%. He said, okay, great. And what % of your brain knows stocks and bonds and all that? He goes, probably about 15%. I'd say, 15%. He goes, that's your allocation, because that's your specialized knowledge. And so I like real estate, I like entry-level housing, and I like development because I have an edge. Right? I know the municipalities. I know what the land's worth. We force appreciate the values in the lands because we go to the city and we rezone it to way higher density. We take homes that have pieces of land that have one house on them, and we make it where you can put 150 houses on them. And so we add value to the seller through that specialized knowledge. We give them 2, 3, 4 times what their home's worth. We build in millions of dollars of equity in that deal through force appreciating the value through adding the density. And then, we understand the costs and everything that's involved in development and the risks. And we've got the buyers and the market for it. So we've got some specialized knowledge in that. So I think, figuring out where your specialized knowledge in, where you can have a potential edge is really where the money lies. And for those people that maybe feel like they don't have an edge, maybe you own your own business and it's doing really great, and you are like, hey, I need to create additional revenue streams, and I just don't have time to become an expert in one particular subject. You might not have time to become an expert on one particular subject, but you have time to research the people that are an expert on a particular subject. And then those are the people that you need to lean on in whatever investment asset that you feel has merit. So, it's kind of shortcutting. It's the who, not how concept. Don't spend years trying to figure out the how. And, if you own a car wash business or, you're a W-2 tech employee, you don't have to spend the time figuring out how to flip houses or, go into apartments. If you've got the funds and you're looking for those additional revenue streams and you want truly passive mailbox money, go find who is doing it really well, that has the experience, that has the background, that has the integrity and the values that align with you, to be able to go after that. So that's what's worked for me.
I agree, especially on the last part where, the integrity and the values, which is something that I initially didn't focus on that much, and then learned through hard gut punches. That's one of the most crucial pieces. Tell
us the story. Like, when was that a hard? Like, how did you learn a hard lesson around partnering with people with the same core values? Because it's a tough concept for people to grasp. They're like, what do you mean core values?
It's 10 years ago when I started my first partnerships in business in New York City, and I didn't have abundance of opportunity at that point. I wasn't fresh off the boat. I've been working in New York for a couple of years, but I've never launched a business anywhere. So when I had the opportunity to partner with somebody, it wasn't in my understanding that I should maybe evaluate 10, 20 different opportunities and partners and kind of understand where they come from, how they think, what are their values, what's their integrity. So I got into 2 partnerships rather quickly within less than 24 months. And within less than another 24, 36 months after that, I realized that this went way too quickly, and that it can get as ugly as a divorce. I would assume, never been divorced, but it wasn't pretty, and when you have a lot of money tied up in a project together, and people kind of falling apart, the alignment isn't there, and one person wants to go right, the other person wants to go left, then you have to decide, okay, what is more important, my peace of mind, my well-being, or the money that I put on the table? And in one of those 2 opportunities, I kind of walked away from the money, knowing that if I stay involved, it will drive me insane, and we have a very high likelihood of losing the money. And if I drop the ball, so to say, or just leave the business to that guy, he will eventually run it in the ground, which is exactly what happened. And we had a couple assumptions that were wrong too. So it wasn't just on him, but it was in the execution where I learned that he was like really intense, and he would drive our team crazy, and we would go through a lot of different people in our team because of how he conducted himself. And the bigger the pressure came financially, the more crazy he acted, and the more people we lost. So that's kind of when I also learned. So one is the due diligence on your partner. What's their track record in terms of how they are as people? What are their values? How will they act when things go sideways? And that's like the really crucial part. Like everything is fine when you make money and things are rosy. Usually people don't get into the weeds in that. Like it gets ugly when things are not fine, and that's when you want to know you're sitting in a boat with somebody who wants to row the same direction as you to save the situation.
Yeah. What were the core values that y'all didn't align on?
Well, I will start with a simple, which sounds weird, but I woke up and I would meditate, I would work out, and then I would come in and try to do my best work. He would get up, smoke a Cuban cigar, and have maybe a quart container full of coffee. So you have one person in who is fully jacked up, and you have another guy in who is rather centered, trying to do his best work. And that's when I realized those choices, those are part of value systems. Like, okay, how do I want to show up for the people around me? And he chose up to show up in like this very driven, anxious mode, which might have at some point in his life worked well for him. But it hasn't worked because he's been a leader. You know, there was an entire team relying on him being centered and cool and making good judgment and inspiring them to put their best forward. But instead, he was driving them insane, which means we had high churn. High churn means, high cost for nothing. You have to retrain people, which means you're burning more of the capital that you're supposed to live through maybe the valley if you're not hitting the revenue yet. So, and then I also remember one particular night we were sitting kind of in a cigar lounge, and we were talking a little bit about different things. And I was like, wow, we really don't align on those like key things that I care for that you clearly dismissed just right out the gate. And then there was like a second voice in the back of my head, and I was like, oh, well, maybe that's what it takes in New York, But there's two aspects to that. One is I wasn't personally reflected enough to make this a hard no and be like, okay, maybe this is not the partnership for me. And the other part is simply, again, I didn't have abundance of opportunity because I was kind of new to the game. I was happy that we could do something together. And I was introduced to him by a friend, and we made it work initially. And then I realized the real trick is volume. You have to meet more people because it allows you to know yourself better by reflecting on what other people are saying. And it also allows you to build a lot more opportunity. So you can cure a lot of things through genuine volume, where you don't just go through the numbers, but you're actually just ramping up the volume to have more exposure. And you will learn so much in that. And you will also learn a lot of what's no for you. And I think I've always kind of made things more focused for me by understanding what's a no. It was always more obvious for me what's a big no than what's a big yes. But I always came closer to yes by refining my no's.
Yeah, what you just said is absolutely powerful. If every single human being did the work, the self-reflection and discovery that you've done to identify what those core values are, it applies in so many situations, not just picking out business partnerships that are going to work out really well, but it works in picking out a spouse as well, your wife. It works in building a team, attracting people in the company that are going to get along. Culture is what happens when you have everyone in an organization communicating with each other with trust, as if there's not a wall there. And culture is probably the number one thing I would argue that grows big organizations. If you got something that works and you can inject some culture into it with the right people, boom, the sky is the absolute limit. So props to you for figuring out what your core values are. I've got them written down. Growth is a big part of mine. Like, we don't let anybody in our organization who's not growth minded. One of the first interview questions we ask them before we even meet them is, tell me all about the last 5 podcasts or books you've read. And if they haven't, well, then that just tells me that they're not very growth minded, and it's not going to be the right fit. I want to know about people's volunteer work. Hey, tell me about the past mission trip or the last time you volunteered. I want to make sure people have that like service first attitude, stewardship. Another one of our big ones is competitiveness. And I'm super competitive, and so this is probably a direct trade off me. You want to work with other stallions that are like pushing you. There's a cool little, I forget what it's called. There's like these 2 horses that when you put them up next to each other, they like push each other. They can do a lot more than if they were to do it individually, because they're like sizing each other up and they're like both pushing each other to do more. And that's who you want in your organization. You want those type of people there. So we're really big on competitiveness, and then integrity is something that we pull out during the interview process. You can sniff that out usually after 4 or 5 different interviews and asking some behavioral style questions. But the core value identification, in yourself is probably one of the probably one of the most important self-discoveries you make about yourself as a human being when it finally happens.
Yeah. The integrity part, how do you kind of shine light on that? Because it's something I'm very big on. And like the minute you lose trust with me, if I smell anything that's like where the integrity is out of place, I'm very quick to end that relationship, whether it's a business or if somebody's working for me. Because if I can't trust you, then it means the compounding effect of the relationship is already dead. Mm-hmm. Like, okay, then the best I can get maybe is you service me on something that I need right now. But beyond that, we can't build a long-term relationship, which means the biggest upside of working together is gone.
Yeah, for me, it takes a lot of touches, and it depends on the environment that you're in, right? So if I'm in a interview situation and I'm trying to sniff out integrity versus if I'm looking to, invest in a specific operator, our capital and our investors' capital and do a business partnership, that's going to be a much different process and much longer drawn out and intense process to find integrity. But a really good way to try to shortcut it is looking at referrals, good referrals that you trust. That's a really big one, and when we're interviewing people, we've got a pretty good idea of their background and their experience. I'm a big fan of storytelling. So, one of the ways that we sniff out BS in the interview process is we use behavioral style interviewing. So you'll never hear me ask a question, well, what's your greatest strength? How do you turn a weakness into this? Because people come with these canned responses to interviews. And my goal is to get rid of that. And it's the same thing. If you're interviewing a sponsor because you're thinking about investing capital with them, or you're, looking at interviewing a business partner, instead of asking these questions that have these canned answers, use behavioral style interviewing where hey, tell me about a time where, let's say I'm hiring a sales rep, for example. Tell me about a time you got a customer to talk about their problems. Tell me about a time where you got you successfully were able to change a customer's mind. I want to hear stories. People have a very hard time making up stories. So if they can't come up with something, or maybe they are telling some stories and I'm talking to the referrals and I'm trying to hey, is it true that he did this and that based on what they're telling? That's one way that you can sniff it out. It's going deep with the referrals and really getting to know them and getting to know their relationship with the person and just making sure that what they're saying matches. And it's the same thing with, business partner relationships. I always encourage, we've got investors that don't mind taking calls. I've just over 5-6 years, I've developed a good relationship with them. And so every now and then there's some people on the fence that are like, hey, Brandon, we want to invest, but we're just not sure if this is the right fit. And I say, hey, look, this is your decision. I'm here just to provide you the tools to make a decision. If you want to talk to some people who've been investing with us for 5, 6, 7 years, here's their phone numbers. They said that I can give them to you. And so you're hearing it from someone who has experience with that person and can vouch for the experience. Because like your point that we were talking about when we first hopped on here, people who do have that integrity value, they don't tend to hang around very long, especially in the business that we're in. Both of us, we syndicate real estate deals. We raise capital from investors and we put it in vehicles that get them on the road to financial freedom. And people who take advantage of that, they don't last. And so that's another little tool you can use. If someone's been doing something for, a very, very long time, that's usually an indicator that they probably do have that integrity principle. So those are some tools that I use.
Yeah. Especially if they can turn and say, hey, you can speak to my providers, you can speak to my the people that have been investing with us, some of them, whatever. Like, let's say I'm in business for 17 years, some of them been around 15 years, 12 years, 10 years, 7 years. That's like a very, very good track record to point to them. Like, hey, there's genuine long-term relationships. It's not that we're flipping all our vendors every year here over the last 20 years.
Right. Yep.
Well, Brandon, this has been super interesting. I also want to highlight your podcast, Recession-Resistant Real Estate. What are some of the key topics that you like to speak about there?
Oh man, we go deep. We really enjoy interacting with business owners. It's not just business owners, but anybody who is looking to grow their business, learn leadership, learn about investing in real estate. We have guests on from all different areas to speak on getting a great return on life in general. Right. And so we don't just talk about money and real estate, but we bring some other concepts in there because money is just, one topic in life. So we really try to push what's possible with your body, your being, your balance, and your business and your finances. So got a ton of people on there, a lot of fun topics. We just, again, like this, we get people on and have a lot of fun.
Yeah. This is why this is called the path to wealth, wealth like well-being, and which also leads me to one of my favorite questions. What do you consider a life well lived?
A life well lived for me is being on my deathbed and looking back at all the unique, unforgettable experiences that I've created with my loved ones. That's a big why for me. Every year I do a mom-son trip. There's a theme around it. My mom's a history teacher. She loves history. So guess where we go every year? Somewhere with history. And she loves it. I do a sibling trip every year. I just got back from Lake Tahoe. Visiting Lake Tahoe was on my brother's bucket list. Every year we go somewhere on my bucket list, his bucket list, or my sister's bucket list. I do a father-son trip every single year, somewhere, something around like my dad's bucket list items. So for me, if I'm 100 years old, I'm shooting for 120, but if I'm 100 years old and I've got 80 of these sibling trips that we've knocked bucket list off, if I've got, 50 unique unforgettable experiences with my mom, as I'm on my deathbed and I've collected all these amazing experiences with loved ones, that to me is winning at life.
Yeah. I think I actually have to steal this from you and start doing this. I love the idea of having those dedicated trips, and my mom would love this. We do have some individual experiences where it just happened on happenstance, but I think becoming more intentional around that would really be very worthwhile. So
if you had billions of dollars in the bank, what would you do with it? A lot of people think that they're going to, okay, I got $1 billion. Now I can plan these fun family trips or times with mom and this and that. No, what we do is not expensive. Anybody can do it. It's just a weekend, but it's being thoughtful around what's the bucket list item for this person. How can we make it fun? Do a unique theme. It's sitting down and doing it, and you can do it now. Most people don't realize this. They're like, oh, I'll wait till I get a bunch of money and retire. Like, no, what would you be doing right there today if you had all the money, and just do it? Start doing it.
I agree. One of the books that I read a couple of years ago was by Tony Robbins, Money Master the Game, where he's like, okay, take the lifestyle you want or the next bigger version of that, or the utopia. And then it's now put numbers to it. And then I realized that a lot of the stuff that I thought was utopia was a lot more achievable than I ever thought once you put the mental work to it and you put pricing to it, and you're like, oh, this can be done. I don't need to become Elon Musk to do this stuff.
Yeah, it's very real. Again, that's why I fell in love with numbers and finances, because it shows you the path. It makes it real. Right? It looks like this faraway place, like running a marathon, but it becomes very real when you actually create a game plan using the numbers, and it feels real.
I like that. Well, Brandon, where can people connect with you, find you, or invest with you?
So my name is Brandon Cobb, like corn on the cob. I'm on LinkedIn. I'm on Facebook. I'm on Instagram. Our firm is HBG Capital. I always say that, hey, if you're somebody who's looking to build a legacy, if you're wanting to retire, if you're wanting to make an impact, with passive income from real estate, we've got a ton of free resources on our website. You can go to hbgcapital.net. That's like Harry, Bob, Gary Capital.net. I joked that someone stole the .com, so I couldn't get it. So it is a .net. But on that website, we did write a book. It's for people who may be a little green or just getting started in their investing journey. It's called 100 Questions Business Owners Ask Before Investing. And I wrote that book because I got a call from one of our investors one day who asked a favor. He said, Brandon, my friend's going through a really rough time. He had an investment that didn't work out. Could you talk to him? And I said, sure, give him my number. And he calls me, And it became very, very evident very quickly that this person didn't know what they were doing. The person they invested with was a real estate person and had these deals and apparently had a good reputation. But again, he was so green to it, he didn't know the right questions to ask that would have prevented a capital loss. And unfortunately, all his money was gone. He did not properly secure it. Like, there was no documentation with the investment. I mean, it was a disaster. And I was like, dude, if I could just prevent this from happening to one other person, I would be happy. So I put that book together, 100 Questions Business Owners Ask Before Investing. You can grab it on our website. It's completely free. Hopefully there's some content in there that can help you sniff out the red flags on your next investment, or more importantly, identify the green flags that'll make you feel comfortable.
I like that. And we'll also make sure to add this to the show notes. So thank you so much for coming on today, Brandon.
Yeah, man. My pleasure. I appreciate you having me.
Thank you for joining us at The Path to Wealth. We hope you enjoyed today's episode. Check out our upcoming guests and be sure to share it with all your friends and family that want to take their life to the next level of wealth.